Hello everyone, just wanted to go over 3 trade breakdowns for you today in a bit of detail. 2 were losers, 1 is a really quite a large winner. Talk them through to you in a bit of detail in terms of the order flow, the breakdown, how I stick to my rules, how I follow my plan, and so on and so forth. So we'll start off, obviously Bitcoin today is seeing a large move to the upside. I won't really talk about that too much, but the actual initial trade we're going to talk about is this one here, the first trade, and it was a loser, and it was right here. So it was, if we just pull this up here, we had these, not these highs, it was these highs here. Okay. And I took a short really quite abruptly. It was like this. And I was really looking for this to take the lows at the time, bring it all the way back down to here. This clearly didn't happen and it just shot up. The good thing about this, having obviously a risk management in place, which, if I can just pull this up even now, you can see I've already got my kind of trading plan there. I highly suggest some of you write stuff like this out for yourself. Again, very basic. Some of it is really, really in depth. This literally is my whole trading plan. Each little subsection has got its own category, which I'll walk through with you in another complete video. But yeah, that's just there for my own sake. In relation to this trade, why was my point of interest? Again, this is all covered within my own trading plan. I literally have 2-3 strategies I trade, and it's all detailed in great detail. So why was I interested in this level to begin with? Well, if we're looking at liquidity, I mean, it won't show at the time, but if we just look here, above this high, right, there is no swing high for a gap. So this is a gap in price action. Okay, you got high, 3 highs before a gap in price action. This is the level of interest. You then front run it, you then take it, and then you see this candle here, this red candle is where I then actually got interested and thought, I'm going to execute here. Just moving over to XO charts real briefly here, if we can just go to the 15-minute and see if we can find this over here. Right, this was the candle here, this red candle here, where you can see the wick above, the close below the 50% mark, spike in volume, the liquidations heading into the level of interest. There's a lot of reasons why I'm actually interested in shorting this. A few things where I could have actually proceeded better, to be honest with you. The first one was actually the initial, I like to see more green towards the upper end of this candle, especially if I'm trading like a trap value area. I want to see a lot more green towards the upper end of this candle where the value area is trapped. However, I kind of disregarded that because I thought the previous candle had seen it already, and then this candle had taken it out and closed below, so it was already valid. Anyway, you got the drop and it just rallied up anyway, and I never hit any sort of TP on this trade. But there's a lot of things really in regards to actually seeing this go lower. Again, I don't regret these trades. It was literally part of, as I always like to bring it back to, my system. In all these cases, all my system, it literally followed all my rules in terms of what was my level of interest, those runs of liquidity before a gap in price action, the liquidity runs on the 15-minute, what was the execution, spike in volume, liquidations, trap value area. There wasn't really extended delta, but all the other factors were there, and that's completely fine for me to take a trade. Bearish candle formation, and it just didn't pull back to anything enough, and alongside the fact you had poor lows on the day. So I was like, this is worth taking a trade for. I was wrong, completely fine. -1 on that trade, and it continued to move up. Again, by the way, for anyone who wants to reference this is on the 28th of November, 28th of November, so like last week, literally this day last week. The next trade that I ended up taking, again, which was actually a loser, was this right here. So if we head back over to trading view, so that's the first one. Okay, and if we just go over to the second one here. Now, I put out a stat on this day, so this is on the last Wednesday. So this is on the Wednesday, where if we just highlight this, and I'll talk you through this in a bit more detail, where there was, and I'll tell you the stat now, I've got it on my whiteboard over there, so I'm not gonna, it's 94, well, it's actually lower than that now, I need to add this one in. It's probably like 93% chance, 94% chance that we saw this high in particular taken out on that day. Okay, so with that being said, my idea for the day was to look for a long trade. Where am I going to look for a long trade? Well, I need to have levels of interest, POIs, points of interest, whatever you want to call it, doesn't really matter to me. And that for me, again, in a very similar fashion, was in the opposite direction, where you have low, 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 a load of series of lows before a gap in price action. This was our gap in price action. Okay, right. And for me, I was like, okay, well, I'm going to look for a swing failure pattern there. We didn't get a swing failure pattern. Now, why did I kind of mess this up to an extent? Not mess this up, but something I definitely took to note was my anticipation at this level. I had, if we look at XO charts, we can go back to XO charts on this one, why not? Because I still got it highlighted. But if we just replay from here, We can pause this. And again, on XO it's great because you can slow it down and everything. And this is great, kind of like a drill to perfect yourself for when these order flow moments actually occur. Let's make this actually straight. This is not straight, is it? Okay, that's a bit better. Coming into the level of interest, literally what we saw, right? Just before, upon this actual candle forming, it wicked down, which is going to show you in a second. It wicks down and it looks like it's going to close above. And through my trading experience, I've got really good judges in terms of anticipating a candle closing above. This one just seemed to not be the case. Okay. This one did not close above. I mean, you'll see here in a second, it wicks below. I don't enter here. I don't enter here. I don't enter here. So look, cool. That's a good wick. That's a good wick. Okay. For me, I'm telling you what I'm seeing in real time here. That's a good wick. Right now I'm seeing, is it going to come back above? And if it does, I'm like anticipating it closing above here. So yeah, what you ended up seeing, if we just let complete there, right there. Okay. I'm saying, okay, this is now a strong enough buyback. I'm actually interested in longing now. Long invalidation below that low at a key level of interest, again, with all the following criteria in this case, even more. And again, the one scenario in this case, which did kind of, I guess, overrule it, which in my opinion let it down, was the anticipation of the level. I could have waited to get the confirmation, but sometimes when you get the confirmation and you do wait, it doesn't actually play into your benefits. It actually, price will move before you actually get a chance to enter, and it actually hinders your R. It makes the trade much less worthable, in my opinion, to actually take the trade at that stage. So sometimes I'm actually anticipating the trade, and it depends on the certain scenarios that I've already got noted down. And it's a type of nuance that I've also got noted down. So again, I entered. What actually happened, and if we're looking at this case again, spike in volume, liquidations, extended delta 26 million, delta minimum minus 39 million. And you can see, we had the potential for a trap value area, right? So that was the scenario there. What actually ended up happening was it closed just below, it didn't see anything. And by the way, how I manage this, and I'll be going over this in a thread, trade management. When I'm anticipating a trade, and as soon as I realize that I've got the anticipation wrong on a trade, I'm literally out of that trade straight away, because it means my anticipation's wrong and I'm anticipating something else happening. This was complete false anticipation in this case. So I completely closed it out before it even hit the low. Regardless of the outcome, it's not done what I had anticipated it to do. So I literally just closed it out there. And even if it pumped from here, I would have been, fine, because it was a wrong anticipation, but it dumped. I was out of the trade well before that anyway. So there was like a minus 0.4R, 0.5R on that trade. In total, because I closed it out earlier, right? And now those were the two losing trades. Again, I don't regret any of them, okay? Because because I follow my rules and everything in that such. If we're just moving on to the winning trade, I think this one, again, you will notice here, these are all very, very similar trades. It's literally just about how the outcome prevails itself, how I actually ended up. This trade is really great. I'm actually still in part of it now. So if we just go to here, and you could see on the day, I don't know if I mentioned this on Twitter, but I was looking for this low to be taken. And so this was again the next day, heading into Thursday. Why? Because you have again one low, two low, three higher lows building up. Right? What happens? You head into a level. Right? You get that extended delta, the spike in. I'll show you the order flow in a second, but you get all this, the correct stuff. The SFP in this case, there was, again, anticipation in this case. I'm completely fine on that. It goes sideways for a bit and then it just completely rallies, and the market context is extremely important in this scenario, which I'll walk through in a second. Just heading back over to XO, if we go back. So you saw an SFP, right? And this was all the way down here. Okay, 30th of November. Swing failure pattern, a lot of negative delta down there. Price retraces down there, but I'm not fearful at this stage. I'm very comfortable in thinking that this can, my validation is below the low. Before getting stopped out. What then happens, and why I'm actually even more confident in keeping this open at the time whilst we're having this sideways price action, was I could take a dynamic profile tool, take it across this whole piece of price action here. There's a lot of new shorts opening here. Now, I'm still placing my bets that these shorts are going to be proved wrong. So if price is to squeeze up, it's going to be like a decent squeeze in terms of squeezing these shorts we've all entered here with anticipation of price heading lower. They'll be wrong if this squeezes up. Price squeezed up, right? And at this stage, my initial take profit was actually all the way back above these highs. I really wasn't I knew at this stage if it was to squeeze, it wasn't just going to squeeze to this high, or these. It was going to squeeze the whole way and hit that high hit rate level that I had up here the whole time. So although it didn't get hit the previous day, it still had a decent, the chances decreased, but it was still like 80+% chance to get hit the next day anyway. So that then got hit, and that basically led into the weekend. I generally don't trade Fridays or Friday evenings, Saturday, Sunday. So upon this happening, right, I hit my first take profit, and this was where I actually reacted here, this candle here. So it had my reaction here. I closed out like 55%, and let's talk you through this because it's going to talk about adding to a winning trade, where I closed out 55% on this green candle here, not the red one, this green candle here. There was a spike in volume, etc. I was just comfortable locking in that profit. Price then obviously another SFP, another drop heading into Friday. Now, what I did on this Friday in terms of trade management, I want to analyze this trend with you all. Okay, this is really important because after you've seen this SFP, the sideways, you create this kind of new ongoing trend. Now you've got to think to yourself, where is it? Can this trend come to an end? You've got this ongoing piece of upward price action. At what level, if lost, could this trend come to an end? And I'm thinking, I'm already in a winning position. I would like to add to this trade because there is I thought there was a likelihood that this did break out fairly aggressively if it didn't pull back, and I was willing to place a bet on that. So how would I do that? If we just head back over to trading view, right, going back over to here. So again, I've taken profit there. Okay, and then I'm thinking to myself, okay, at what point do I want to, I could add to this trade, or at what point am I wrong on this uptrend working out? So we had this uptrend here, and I had the idea, I believe it was around 38,200 at least. So if we just look in here, I've already got a really good entry down here. Again, you've got to bear this in mind. My entry is all the way like down here already. So we've obviously seen, I've taken off some profits. I've then seen this retrace, and my idea is, well, I'm going to add to any of this pullback as long as I'll fully close this trade if we see this 38,200 region completely lost, right? If this is completely lost, then I'll close out the rest of this trade and I'll see lower prices. But otherwise, I'll actually look to double down on my current position size, right? So that and actually have more position on this winning trade, so that if it does continue the direction I'm anticipating, that I actually make more money, right? So what actually happened was we saw this retrace. I didn't buy. Don't be fooled. I didn't buy back here. I actually bought back, I believe, on this candle's retrace here. So it retraced here. I'm anticipating the uptrend to continue. And again, if it had lost 38,200, it also would have seen like the first sign of like all these lows being lost convincingly. And it would have been like your first kind of structure change. So I added to this position size. I didn't add my full clip again. I didn't add my full size all over again. I added what I would, so I'd taken off like 45% of the time. I'll need to check the figures, but I took off 45%. I had like 55% left running. So then what I would then do is I'd add again that 55% I already had. I would add it again back here. So I technically had 110% running, right? So I had 100% here, took profits, added again another. I've got 110% here, and again, it doesn't really hinder my position size too much, or my entry, sorry, because I'm adding here. My initial entry was here, like my new entry was here. That's I take that into account personally. Again, it depends on the trader themselves, but for me, I was okay. I actually take note as to where my new entry is, because if price had lost 38,200, I would then close the trade, and although I'd taken 45% off, the remainder would have barely made any money because my new entry was here. Okay. But if I'd gone in a new direction, I'm up again 110, and I can make even more profits from this trade. So I'm actually, head into the weekend. You saw this SFP on the Friday evening. I wasn't interested in taking any more profits here even. More sideways price action. I'm expecting much higher at this stage, to be honest with you, based on my directional biases that I can't really talk about too much. Again, you can just view it as market structure, but I've got high hit rate levels, which were pointed for much higher prices at the end of the day. And what happened was it ended up a lot higher. I then closed out again another 60% upon this initial SFP on the Saturday. Again, my stats show that you can have reversals on a Saturday, especially Saturday evening. So I was comfortable closing another 40% there. And now I've actually got, so if we're talking from the initial position size, I've got 70% still completely in this trade because there's been absolutely no weakness. And how am I going to determine whether we see a sign of weakness? Well, today I had the potential to do that. If we had seen closes below this low here, right, I would have looked to close actually the whole remaining 70%, if we're talking about what I had from the beginning. But right now we haven't, and it's just looking for higher prices. And I think it's really, really important. And I'm really doing a whole thread on trade management, to be actually looking to add to your winners, because it's a massive part to my game. You saw how I talked very openly about my losing trades, planning them out, the levels. And this one here was, again, it turned out to be a winner. This could have easily turned out to be a loser. It's just, I guess, the randomness of the markets and playing my cards right, because I know at the end of the day, my edge is profitable. And again, I've got my whole system in place to really walk me through it if I ever have any issues. I don't have a mentor in terms of trading that I can go to and say, what happened here, what happened there. I literally have to go back to this as my mentor and go, where did I make a mistake? Run through my trading plan and rules and see where I can adjust going forward. And if there is a place to adjust going forward, or did I just do everything right and the market just wasn't fulfilling my trades for that day? So again, hopefully this makes sense on all these type of trades. This trade is probably, in terms of the trade itself, it's probably one of my biggest trades to date. Purely because I added to the trade and the way I've been managing it based on the structure itself, and also my high hit rate levels for directional bias. So again, sorry for the long and drawn out video, but I hope you gained something from this, and I'll catch you later. Thank you, everyone.